Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, August the 26th. The year's 2020. Let's talk trading. Live replay challenge. Yes, that's what I did yesterday. And man, I hope I didn't let anybody down because for the first part, and that on the 1 hour charts, I guess I kind of stunk up the place. It was awful, right? I think, what was it, 5 out of 5 losses? But then when we switched to the 5 minute chart, I did a little bit better. And what I realized was, I think it was later last night when I was thinking about it, and I was looking at some of the comments people were saying, I realized that I am a reactive trader. I react to what price is doing tick by tick. I don't predict. And so, the whole idea of saying, here's where you enter, and here's where your stop loss is, and here's where I'm going to take profit, that's basically predicting. And there's nothing wrong with that. And, you do your analysis, and somebody asked a question about market structure, and it's like, no, I don't take any of that into account when I trade. And I'm not making any excuses. I didn't do well. But the thing is, when you don't do well, whether it's in trading or in life, you need to learn from that experience so the next time you do better. You take away, you improve from that standpoint. So, when I watched it last week, what the other trader, like I said, the comments were brutal, and I was thinking maybe I shouldn't do this, and then it was just like, you know what? What the heck? I've been getting harsh comments for the past 20 years, ever since I started posting on online forums. So it's like, you know what? I can take it. But once again, the main thing is to learn. And so, I learned that that's not what I do. That's not um what I perform at. That's not how I trade. And because it's really tough when you think about it, I'm sitting in there grinding it out tick by tick, but it's like, okay, no, we're going to give you a candle, and then we're going to give you a whole nother candle. And it's like, well, I mean, for example, if on that one candle, if I said went up 10 pips, I would have moved my take profit up to break even, or my stop loss up to break even, but +5. But if my stop loss is, at, entry -10, and that candle goes up and then goes down, well, I would have been out with a profit. But if my take profit beforehand was at 20 pips or 25 pips, then it turns into a losing trade. But once again, that's not how I trade. And so, that's what I learned from that experience. And also, you have to understand one other thing about my videos. These are for educational purposes only, and your results may differ from mine. And trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, in that second challenge, it was like picking the candle colors. And if you remember, I picked nothing but green. And probably some of people are thinking, oh, this guy, he doesn't know what he's doing. But remember, I'm a statistical trader. And so, on analysis, if you're a green rat, you've got just a slightly better chance than if you're a red rat overall on the daily candle color. If that's the game you're playing. So if you think about it, this is kind of like what the odds are on roulette. About 2% to the house. So over time, if you just say every day green, 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 over 1,000 bars, you'd win. And so that's just what I did. Now, of course, there was some further analysis, but I didn't know which pair I was going to have an advance, but I can scan through the pairs and you can just, look at that number. How many times the green is bigger than the red if you just go through the pairs over the last 1,000 days worth of data. So, there was a method to my madness. But of course, I could have improved slightly because, and I'll show you how. If you notice, after four in a row, the numbers just dropped way off. And if I remember correctly, I think there were five greens in a row. And so once again, if you scan through the pairs, you can see getting six or more, and even getting five or more, it's an anomaly. It really is. So that's just something else to know in your trading, that, after so many green days in a row or so many red days in a row, the chances of that happening is just an anomaly. Now, had I switched and after that five in a row, if I would have started calling the reds, I mean, who knows? Maybe I would have picked up. I might have improved to, maybe I might have been 75% right, but I was just sticking with the green rats because I knew I had a slight edge, and I was just hoping maybe I'd do a little bit better than 50%. I wasn't trying to be 100%. I wasn't trying to analyze anything, just like the rat. If you know the story of the rat and the Yale student, I just knew where my edge was. So, that's pretty much what happened yesterday in that trading challenge. Like I said, it was fun, and some people, I guess, were pretty brutal in the comments, and I haven't watched the replay myself yet, so I haven't even seen just how brutal the comments were. But I heard there were some people being pretty nasty out there, but you know what, that's okay. It doesn't really matter to me, because just sticking, with the simple trade, which, I mean, based on the H1 candle color, you know, I I didn't have, my indicators. So, and if you remember, I mean, I think his resolution was something like this. So trying to put that stop loss, or I don't know even what you call it, where you put your entry and your stop and then your TP. I don't think we have that feature in MT4. But I mean, for example, it would have been easy to say put, the entry would have been here, and then the entry, the long entry's here. Here's the short entry. Where's the stop? Well, it's at the other side, right? Um, so, but the problem is like, would I get one trade or two? So, for example, if this bar happened, would I have stopped, here? I would have entered short and then all of a sudden entered long. I mean, stopped out here. Now, the question is, because it was basically one trade per chart, but that's not how I would have traded it in real time. And so in real time, I'd say, just using the wall mall money management, we entered the trade. We never got the +3, so we'd stop out at -7. We enter long here and pick up 10, 20, 30, 40, pips. That wouldn't have happened. So once again, you know, I trade reacting to what's happening moment by moment. I don't put a trade on, say, here's my TP, here's my stop loss, and walk away and come back the next day and see what happened, or the next week, like some of these guys do. And that's what they do is fine, but that's not what I do. I mean, it would almost be, I was trying to think of what a good analogy is. Something that's very similar, but you do something different. And I haven't quite come up with one. If anybody has a good analogy, um, let me know. But because I can't think of one. like I said, I'm not trying to make any excuses. Like I said, the first part on the 1 hour chart, I stunk up the joint. But you have to be able to laugh at yourself and you have to be able to learn. Um, so the thing is, like Walmart even told me, because you shouldn't have started trading at the beginning of a day. You should have waited till at least after the Asian session. But I wasn't thinking of that. I was thinking, I don't think people tuned in to hear a bunch of blah, 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 a bunch of stuff that's unintelligible, basically. I think they wanted to see somebody trade and, maybe see a simple method. I had the DSR trade on. I'm not even sure if I've got that on one of these screens, but I was using the mid dots. You can even switch over here. Um, Basically, but it was a line as opposed to just having the dots. And somebody goes, "Oh, you got a squiggly on the chart." I knew that would happen. I think they were just razzing me in good nature. Um, but the fact of the matter is, no, it's just the previous candle's midpoint, and that's why on his chart you could see that line was over to the candle that hadn't even started yet. So like here, the line would probably be approximately about here, which would be about the halfway point. So it would it'd just be one of those tough things to do. Like I said, getting thrown a whole candle at a time, it's just and this would have been a perfect example. Here we've got a close below the mid dot, or rather an open below the mid dot, and then the candle closed. So if it came up, I'd say, okay, um, what we want to do is we want to go short, okay? And then all of a sudden here it goes long. And I say usually, if it closes above the mid dot, you want to be out. But here it didn't close above the mid dot. But so where would my stop loss be? Would it be here? Would it be up here? And so that's one of those ones. Would it be at the high here? Yeah, that's one of those ones. It's like I'm not used to doing that. That's not the way I think. My money management, my risk management is totally distinct from the entry method. That's why you say the real test is to put somebody in a trade. You're already in the trade, and all you know is the direction, and so you decide where would you exit based on the where you stand. If you're in a trade and you're at zero, no profit, no loss, then it's like, okay, well, you say, well, how many lots, what's the dollar per pip, what kind of risk, what's the account size, and you figure and you make a calculation. Okay, well, my stop loss needs to be here, and then as it's in profit, I'll start taking it. And so once you're in profit, you don't want to give it back. Some people give it wiggle room. Some people stack the bricks, as I say, stacking up the pips, throwing another pip on the pile. But I really think the biggest thing I learned was the difference between reaction versus prediction. I mean, you could say, like, do I predict these gaps to be filled? No, I don't predict it. I just know statistically they will. And if price is moving away from the previous close and it gapped down, I'm not jumping in the trade yet. I'm going to wait to see some kind of confirmation um, to take that trade. Um, let's see what else we have here. We've got or the pivot point. Somebody was saying, why do you have weekly and daily pivot points on an M5 chart? Well, because I know these pivot points usually price has a tendency to go to it. So if I put my TP at the pivot point right here, now it comes back and takes me out of the trade. In reality, if I'm missing by a point and it starts, or a pip, and it starts going back the other way, I am taking my money off the table. But wasn't allowed to do that in that trade because you can't see it because they're throwing a whole candle at a time. So Anyway, that's what happened. So just remember, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks.